All right, so predicting the stock market kind of feels like reading tea leaves, right? Charts, graphs, news headlines. It's a lot.
Yeah, it can definitely be overwhelming.
But imagine a system that analyzes all that data for you and could make, well, smarter investment decisions.
That would be pretty amazing.
That's exactly what we're diving into today. A new approach called LLMoE,
LLMoE, yeah?
LLM-based reading in mixture of experts, to be precise.
Okay, so some serious AI in the mix.
Absolutely. It combines the power of artificial intelligence with a more, you could say, human-like approach to problem solving.
Sounds intriguing.
We got this research paper and really lays out all the details. And it's actually a pretty fascinating glimpse into how AI might, well, completely change how we invest.
Okay, I'm hooked.
Imagine a system that not only just crunches numbers, but also reads, like actually reads and understands news headlines.
To predict what? Stock prices.
You got it, where those prices might be headed. It's
Like having your own team of analysts?
yeah. Working 24/7, constantly absorbing information, refining their predictions. Okay, so let's start with the basics. You know those traditional trading methods? Just looking at charts, technical analysis, that kind of thing.
Yeah, those have been around forever.
We all know they have their limitations.
Yeah,
so-
absolutely.
I mean, markets are incredibly complex.
Yeah.
And those methods often struggle to keep up, with the constant changes and unexpected events. You can do all the research.
And suddenly your stock tanks.
Exactly.
Yeah.
And that's where this concept of mixture of experts comes in, MOE for short.
Oh, we got it.
So instead of relying on one single model, one approach, MOE, well, it brings together this diverse group of experts, each specializing in a different aspect of the market.
Kind of like a real-world trading room.
Exactly. You got your technical analysts, they're poring over charts. You've got the news junkies, they're dissecting headlines.
And the economic gurus tracking all the global trends.
Yeah. Each expert bringing a unique perspective to the table.
Right. Makes sense.
And by combining all those insights, well, you get a much more comprehensive understanding of what's actually driving the market.
Yeah, makes a lot of sense. But I'm guessing there's a but here.
Well, nothing's perfect, right? Traditional MOE models, they have some drawbacks.
Okay, like what?
They can be a bit rigid. They rely on static neural networks, and those aren't very good at adapting to new information or handling the often limited data you have in financial markets.
So they lack that flexibility that human traders have, that ability to just react,
Exactly. And plus, they really tend to focus just on the numbers, the numerical data.
So they're ignoring all the information that's hidden in news headlines, the human element.
That's exactly where LLMoE steps in. It bridges that gap between the quantitative and qualitative analysis.
Okay, now I see where the LLM part comes in.
Right. It brings in large language models, or LLMs, into the mix. You might have heard about these in other contexts.
Yeah, they're getting pretty popular.
They're incredibly adept at understanding human language, extracting meaning from text. So it's like having, I don't know.
A super smart translator.
Yeah. Someone who can understand both the language of Wall Street and the language of everyday news.
Okay, so the LLM is like the brains of the operation.
Exactly. It analyzes both historical stock prices and relevant news headlines, all to develop a deeper understanding of the market, the sentiment.
Wow, okay. I am officially intrigued. So how does this whole system actually work? Break it down for me.
All right, so it has 3 key stages. The first, the LLM-based router.
Okay, that's where the LLM does its thing.
Right. It reads all the data, the numbers, the text, and interprets it in context. Then, get this, it categorizes everything as either optimistic or pessimistic.
So it's trying to predict what if the whole market's going up or down.
Not exactly. It's more like, is the sentiment around a specific stock or event positive or negative? Like, is there fear, uncertainty, or are investors feeling bullish? Gotcha. So the LLM might say, okay, based on everything I'm seeing, I think sentiment around, let's say, Apple is leaning positive right now.
Yeah. Even though there might be some concerns, about supply chain issues or whatever.
So it's weighing both the good and the bad, just like a real analyst would.
And the researchers actually give this great example in the paper, where the headlines were all highlighting concerns about Apple's growth, right? But the LLM noticed that prices and trading volume, they were consistently increasing.
Suggesting what? A more optimistic outlook.
Exactly. It's weighing both the positive and negative, just like a human would.
That's wild. Okay, so once the LLM categorizes the sentiment, what happens next?
So then you get to the second stage, expert prediction.
Okay, now the specialists come in.
All right. This is where the specialized expert models come into play. So these experts are trained on either optimistic or pessimistic market conditions.
They're the ones making the actual price predictions.
Yep.
Yes. They're usually feed-forward neural networks, and they analyze price indicators and all that quantitative data.
But they're working with the information that's already been kind of pre-filtered by the LLM.
Exactly. It's been categorized, contextualized,
Hmm.
so they can really focus.
Like giving them a head start.
Exactly.
Okay, cool. So we've got the sentiment analysis from the LLM. We've got the price predictions from the experts. What's the final step?
All right, so then we move to stage 3, training algorithm generation. This is where the rubber meets the road, right?
Now we decide what to do with all these predictions.
Right, so are we talking about like super complex trading strategies here?
Actually, no. The paper describes a very simple all-in, all-out approach. Essentially, you invest everything if the expert predicts a positive move, and you sell, you liquidate if they predict a downturn.
Huh. Sounds simple, but if the predictions are accurate.
Could be very effective.
Exactly. So speaking of accuracy, I'm dying to know, how did this whole system actually perform? Did it beat the market?
Ah, the million-dollar question.
I know. And to find out, the researchers, they put LLMoE to the test, compared it to a bunch of other models.
Including the traditional MOE.
Of course. So you ready for the results? This is where it gets really interesting.
So they tested LLMoE using 2 data sets. Both were based on a decade's worth of data for Microsoft and Apple stocks, along with all the corresponding news headlines.
So like a real-world simulation, huh?
Yeah.
You want to see how the system would perform, under different market conditions.
Exactly. And what's interesting is that the Microsoft dataset, it had a lot of missing news data.
Oh, right.
Yeah, it was a deliberate choice to see how LMOE would handle less than perfect information.
So it's like testing a self-driving car, but in a snowstorm.
Yeah, exactly.
You want to push it to the limits and see what it can do.
They wanted to know if LMOE could still make those accurate predictions even when it didn't have all the information.
Okay, I'm on the edge of my seat here. How did it do? Spill beans.
The results were impressive. Yeah. LLMoE, it consistently outperformed all the other models, including the traditional MOE approach.
So this wasn't just, like, a small improvement.
No. We're talking significant gains specifically in key risk-adjusted return metrics like the Sharpe ratio and the Kalmar ratio.
Okay, for those of us who, aren't financial wizards, could you remind us what those ratios actually mean?
Sure, the Sharpe ratio tells us how much return we're getting for the risk we're taking. A higher Sharpe ratio means we're getting more bang for our buck, so to speak.
So it's about maximizing returns, but also minimizing that risk.
Yes, exactly. And the Kalmar ratio, well, that takes that concept a step further.
Okay.
It looks at the maximum drawdown, which is the biggest dip our portfolio experiences, and compares that to the overall return.
So a higher Kalmar ratio basically means we're, riding out those market dips without, panicking and selling everything?
Exactly. It's a measure of how well the system can protect our investments during those turbulent times, those ups and downs.
And LLMO scored higher on both of these metrics.
Yes, significantly higher. In some cases, it showed improvements of over 25%.
Wow, that's incredible. It sounds like LLMoE is really living up to its potential.
It certainly is, and it's not just about those numbers, those impressive numbers.
Okay, what else is there?
Well, LLMoE has some other advantages that really make it a game changer.
I'm listening.
For one, it's incredibly dynamic and context-aware, unlike those kind of rigid traditional MOE models we talked about. LLMoE can adapt to changing market conditions, on the fly.
So it's constantly learning and evolving as it goes.
Precisely. It's continuously incorporating new information, both from numerical data and from those news headlines, to refine its predictions.
So it's like having a team of analysts that are always reading, always researching, always updating their models.
That's a great analogy, and because the LLM, it's generating those human-readable explanations for its classifications, well, LLMoE offers something that's often missing in the world of AI.
Which is?
Interpretability.
Meaning we can actually understand why it's making those decisions.
Exactly. It's not just a black box.
Right.
We can see the logic behind its choices, which, well, it builds trust and confidence in the system.
Yeah. That's huge, especially when you're talking about something as important as our investments.
Absolutely. And finally, there's enhanced adaptability and robustness.
Okay.
LMOE is built to handle those wild swings and that unpredictable nature of the market.
So it's not just a fair weather system.
No, it's designed to be resilient, to stay ahead of the curve even when things get chaotic.
This all sounds incredibly promising, but let's step back for a moment and think about the bigger picture. What does this all mean for, the average investor?
That's the key question, isn't it? Could LMOE democratize these sophisticated trading strategies? Could it give individual investors access to tools and insights that were previously only available to, hedge funds and institutional investors?
That's an interesting thought. We've always heard about those high-frequency trading algorithms that can execute trades in milliseconds. Could LMOE level the playing field?
It's certainly possible. Imagine a world where anyone with a smartphone could have access to an AI-powered investment advisor that can analyze market data, understand news sentiment, and make informed recommendations.
It's like having a personal Warren Buffett in your pocket.
Exactly. But of course, there are also potential downsides to consider.
Like what?
What are the risks of over-reliance on AI for trading? Could it lead to unforeseen market instability?
That's a valid concern. If everyone starts using the same AI-driven systems, could it create a herd mentality?
Yeah.
Could it amplify those market swings?
These are important questions that, researchers and regulators are grappling with. As AI becomes more sophisticated, we need to be mindful of its potential impact on financial markets.
And what about the future of, those human traders?
Right.
Will AI replace human expertise, or will it augment human decision-making?
That's a debate that's raging in many industries, not just finance.
Yeah.
It's likely that AI will play an increasingly important role in trading, but human judgment and intuition will still be valuable.
So it's not about AI versus humans, but AI and humans working together.
Exactly. The most successful traders of the future will be those who can leverage the power of AI while still relying on their own experience and insights.
So LLMoE, it's not just a technological breakthrough.
No.
It's a potential paradigm shift in the way we think about investing.
It's a glimpse into a future where AI is not just a tool, but a partner in navigating the complexities of the financial world.
And what a fascinating future it could be. This has been, wow, a really insightful deep dive.
It has.
And I don't know about you, but I'm feeling both excited and a bit overwhelmed by all the possibilities.
It's a lot to process.
It is.
But that's what makes this field so captivating. There's always more to learn, always more to explore.
And that's what we're here for, to help you navigate these complex topics and make sense of the ever-evolving world around us.
So what do you say we wrap up this deep dive with a final thought-provoking question for our listeners?
All right, lay it on me.
What if we could use this LMOE approach, not just for predicting those individual stock prices, but for, understanding the whole global economy?
Whoa.
Yeah.
Okay, now we're talking.
Big picture stuff.
Yeah, predicting recessions, forecasting those market crashes, maybe even helping governments make better economic policies. I don't know.
It does sound kind of like science fiction.
A little bit.
But is it really that far-fetched? I mean, if AI can figure out the stock market, maybe it can unlock the secrets of the global economy.
It's a mind-blowing thought.
Isn't it?
Imagine having a system that could not only predict the trends, but help us understand what's actually driving them.
Yeah, we could completely revolutionize the way we think about economic policy. We could move from reacting to things to actually being proactive.
Right, based on a much deeper understanding of how everything works.
It's like having a crystal ball, but instead of magic, we're using data and AI.
I like it.
Of course, a system like that, it would have to be incredibly sophisticated.
Yeah, way more complex than LMOE.
It would need to be able to process huge amounts of data from all sorts of sources, economic indicators, news reports.
Social media.
Yeah, social media sentiment, even geopolitical events, you name it.
And it would have to be able to adapt, right?
Oh, absolutely.
Because things are changing all the time.
The global economy never sits still.
Yeah.
Any predictive model, it would have to be able to keep up with all that.
It's a tall order.
It is, but the potential benefits, they're enormous.
I mean, imagine being able to anticipate economic downturn
And take steps to soften the blow.
or identify those emerging opportunities and invest in them strategically.
The possibilities really are endless. It's exciting, but also a little bit daunting, to be honest.
It is. It is. It really makes you realize we're living in a time of incredible technological change, doesn't it?
Absolutely.
AI is transforming everything. In the world of finance, it's no exception.
So to our listeners, as you think about the potential of LLMoE and all these AI systems, remember that technology, it's a tool.
Right.
It can be used for good or for bad.
It's up to us as individuals, as a society, to make sure we use it responsibly, ethically.
And to remember, the ultimate goal, it's not just about making money, it's about creating a better world for everyone.
Couldn't have said it better myself.
Yeah.
Well, this has been an absolutely fascinating deep dive into the future of finance. We've gone from the nitty-gritty of how LLMoE works to the broader implications of AI for the global economy.
It's been quite a journey.
It really has. We hope you've enjoyed it as much as we have.
We do.
And we hope you'll keep exploring these topics, keep asking those tough questions about how we can use technology to build a better future.
Thanks for joining us on the deep dive.
Until next time, keep learning, keep exploring, and keep diving deep.